Hey, what's up traders? Welcome back to Forex Gym for another daily Forex analysis for 27th of March 2020. My name is George, and in this video I'm going to be analyzing 4 currency pairs which I see the potential to make money. Before we start analyzing and jumping to the charts, if you're new to the channel, consider subscribing. I'm making daily and weekly Forex analyses as well as videos about the knowledge you need to be a better trader. Starting with the euro against Australian dollar from the daily chart, we see that we have a bit more down pressure towards a short sides, and if we go to a 4-hourly chart, I'm expecting this currency to go down. We have pretty much the same currencies, the ones I analyzed yesterday. It's more or less this still gameplay in this one, and I'm gonna analyze. It's only one different currency, the one I mentioned. I don't have a New Zealand dollar. I instead have the euro against US dollar, which I see the potentials. It was same as yesterday. It's more or less the same today. We still have the same play. So for this one, I'm waiting for, let's go to an hourly chart. So this candle closed just now like this inverse, the hammer candle, sort of almost a doji, and I'm waiting for this price, this currency to push a little bit higher, where this red line at 181.70 zone, which also comes in with these highs here. We got these highs here. Ideally, it will not demonstrate too much strength. It might take this next hour to get up there. Will be in the ideal scenario. If not, then I don't want to see a big strong candle, like for example something like this one. Excuse my drawing. Something like this candle. I don't want to see anything like that. Otherwise, I might be I will wait for the to see what the price gonna do. So it will be the first entry as of the first potential towards short side, and if the price pushes higher and gets stop me out, then the second will be up to these highs, where also we got this daily pivot, and also we got these high here. So that will be the second entry in here, but the first one definitely here. And as of the stopwise goes, so let's mention the entries. So first one is at 181.70 zone, and the second one is 182.60 zone, around that area. For the stop losses, would be about 30. Let me see, 35. 40 to 50 pip stop, probably 40. You can get away to 40 pip stop, and for the targets, we will be targeting these lows down here at 170, about 179.00 here, which gives a good just over 200 pip stop. So 40-50 pip stop will be good, and the target is about 250 pips, which works out a very good risk reward on that. The other thing, if you want to play it a bit more safe, then you can wait until the price breaks this spike and ideally retraces a bit up, and then you can get onto the short side, or you can get onto the short side after breaking these lows. I personally don't do that. I like getting onto the retracement because of the good risk reward it gives me, but that's also if it's your style of trading, then you can do that as well. We continue with the US dollar against Canadian dollar, starting with the daily chart. And yesterday we had this lovely move towards downside, and now we're seeing this continuation. The price looks like it wants to continue to fall. Let's go to the shorter time frames on a 4-hourly. Yesterday, if you follow my trading analysis, I did mention that the trade I was waiting for this one to come up. I think it was up here, if I'm not mistaken, around here. I was waiting for the price to come up here and wait for the setup, and I got into right at the peak of these high here towards short side and ride it pretty much all the way. Actually, not all the way. I got into, it was a daily S1 down here, if I'm not mistaken, at 41.18, 141.18. I got off to here, so I managed to bank about 150 pips, and my initial stop loss was 20 pips, so very good risk reward. It was 1 to 7.5 risk reward, which is very good. So we got pretty much not as good, but a similar potential. I'm looking for this one to have a follow through towards downside, and we have this daily moving average, which is, you can't see it now because I don't have it on this chart, and we have also a 4-hourly moving average. It already broken the 4-hourly moving average, and now it's sitting on the daily one. Obviously, it's not confirmed yet if the price broken this daily moving average until it's closed today. So we're gonna know that tomorrow if the price manages to break that moving average, but it does look strong towards downside. So for now, I'm looking at, this is an hourly chart. I'm waiting for the price to come up to these highs around this one at 40, 140, 60 zone. We got these highs here. Well, I have two potential scenarios depending when it's gonna do it. So if it comes up in the next 2 or 3 hours, then it's fine. The setup is valid. But if the price, let's say, it's gonna continue to fall, then I would be looking to the price to come up to these highs, basically where the price is at the moment. Well, we can use this one as an entry yet until the price falls a bit further and then comes back to these highs here. So for now, I want to see the price come up here to about these highs at 140, with 140.60, 140.55. But if for the reason that the price starts falling a bit down, and then I want to see for the price to retrace up to these highs, which is at 140, about 140.10. So the price at the moment, where the price is sitting at the moment. So as of the stop losses goes, let's say we go into at 140.60 for the simplicity. You need about 30 pip stop. So the target will be, you can use it as the weekly S1 at 139.30. We also have this daily S1 at 139.40. I would rather wait for the weekly S1 as of the first target, and you can take like the half position and let the other one ride to, you can go all the way down to that 3800. We got this low down here, so that's two potential target, and that's for the entry for one up here at 140.60 zone. However, if the price continues to fall and then retraces up to here, which is going to be at 140.10, then we certainly 140.10, that won't be good enough. 140.10. So if we run it to a weekly S1, unless we got the tight stop in, let's say we go in here, I think we can get away with the tight stop in here, 140.10. We can get away with about 20 pips stop in this one, so you can still ride it to the weekly S1 as of the first target, and then run it further down to these daily lows down here. Next currency, we got New Zealand dollar against US dollar. We've seen nice moves yesterday. The price had this nice up move. We had this nice daily candle close very bullish, and the price is almost just air kissed this weekly R1, and now we see that it's retracing a bit down. So from waiting for this one, I do certainly expect a bit more upside, but I do want to see this one to come a bit more. The first one would be at this, for the entry wise, would be at 59.55 zone, or if it starts pushing down a bit more, then I would give it this 59.40 zone. Either way, you can we can use the stop loss a bit wider for the about 25. I think we can go with the 25 pip stop. So if we have 55, 20, yeah, we can go with the 25 pip stop on this one. Ideally, if this sets up right, then we're gonna get this entry right either here or down here. For now, it looks like that the price wants to push maybe even a bit lower down to these lows here. So just gonna wait and see this setup. Either way, if we're gonna get in here, oops, not here. If you're gonna get in here, then we can have the stop loss wide enough. It's about 25 pip stop, so it's still decent. So 25 pip stop, and for the target, we will be looking to ride it up to these highs here, which is at 60.55. So we'll be looking about 100 pips. So if we take 25 pips stop loss, that still gives us a 1 to 4 risk reward, which is more than enough, really. I do expect for this one to break this weekly R1 and continue to about these highs here. We got a lot of cluster open and closes up here, and maybe even price gonna want to push to these highs here. But as of the first target, I'm gonna have it here, and then if I see the potential, I might just take half off and then run the other half to these highs up there. Lastly, we got euro against US dollar, starting with the daily charts. Yesterday we had this nice run up as well for the other currencies. Is due to the US dollar weekend, because the yesterday's news for the jobless claims, it's just skyrocketed, so it has an impact on the US dollar. That's why we've seen this these moves from yesterday, and I think it's going to continue also today and maybe even next week. So let's drill down to the shorter time frame. So the price is testing this as a weekly R1, and we had these lows down here. I do want to see a bit more retracement for this. I want to see to the price to come down. This is the first for the first potential down at 110.35 zone. However, if the price gonna push higher, let's say if the price comes down here in the next hour or two down here, that's fine, this entry is valid. However, if the price continues to go higher, let's say it goes up to this daily R1 and closes fairly nicely. What I mean nicely by is it doesn't put the doji or inverted hammer any candle like this. So if it does it, and then I want to see for the retracement downside where we got this horizontal lower line down here, which is where the price is at the moment, and then would be this entry up here and not this one. It might sound complicated a bit for the new traders, but it's actually fairly easy once you get to know the charts and all that. It will be easier to spot these kind of opportunities. So I'm going to go through this again. So for this one, if for the next 2 hours, if the price comes down to this one, down to here, then this entry is valid for the trade. But if the price continues to go higher, and let's say goes up to this daily R1, and then it starts to retrace down, then we're gonna use the for the entry down this low here. So for the first entry, if the price does the moves down to the next 2 hours, the first entry will be at 110.35 zone. But if the price continues to go higher, test this daily R1, and that then starts to retrace down, then we're gonna use these lows down here, which is at 110.70 zone roughly. As of the stop losses for the first one, if we go to 35, we would be looking about 25 pips stop for the first one, and for the second, if the price comes down, we would be looking, so that's on 70. This one requires a bit longer, so you would be looking about 25 to 30 pip stop will be still good. For the targets, we would be looking to use this 4 hourly and run it to, for the first target will be 111.60. It gives still very good risk reward on that. However, if you want to hold it and run it further up, Thank you guys for watching. This was Daily Forex Analysis for 27th of March 2020. If you find this video helpful, please give it a like, share with your friends, and don't forget to subscribe. I'm making daily and weekly Forex analysis as well as videos about the knowledge you need to be a better trader. Also, if you have any questions, you can leave it in the comments or you can contact me with my social media, which the link's gonna be in the description. Have a great day and I will see you guys in my next video.